Good afternoon, and thank you for joining the masterclass for your agency's SmartPay program. We'll spend about 60 minutes in this next gen webinar talking with Brian Stauffer, CEO of Paperless Innovations, and myself, Heidi Aguskida, the VP of Public Sector, also at Paperless Innovations, Inc. We're a FedRAMP moderate authorized and Treasury FMQ's first source designated software as a service. Our core mission is that CFOs are personally accountable for year-end card authority and the documentation of that compliance. This session is going to address the specific control gaps that expose agencies to audit findings and the certifying officer's personal liability under 31 USC 3528. Before we go very much further, I want to start with a poll. And that poll is in regards to SmartPay, because I know that's one of the things that we all have in common here is our reliance on the SmartPay program and probably the rebates that it generates. And our question for you today is, are you preparing for future reductions in SmartPay rebates by 2028? And you may not be sure. What we're hearing from our clients is that SmartPay rebates are under attack, and that they're hearing from their bank partners that rebates may reduce or may go away. So I'm wondering if you have that same concern. Is that something that's on your mind before you get into fiscal year 2027 and your preparations for what will you do if your SmartPay rebates are greatly reduced? I'm going to go ahead and leave that open while we talk about what we're going to cover today. I know that I promised several items to you in the invitation that brought you here. And so we are going to cover those things, including the 3 audit signatures of SmartPay authority expiration. Each one represents a distinct compliance failure and an audit finding type. We'll very quickly go through those for you. We'll also go through the personal liability framework and the time pressure and volume in August, September that really don't constitute any defense for any incomplete documentation. So, we still have to have the same standard of documentation that we have in other times of the year, even in our highest volume time. And the 5 CFO directed ACTIS controls. So ACTIS is designed to create controls to close the gaps that the CFOs are seeing in the micro purchase area before September 30th. So specific activation dates that will cover for you what happens for you July 1st, that's just passed, August 1st, September 1st. The next thing is I'm going to provide at the end of the webinar a 6-item September 30th closed checklist. And this checklist can be implemented with or without ACTIS. It will be provided as a handout at the end of the session. So please stay around. Would love to have that tool set in your hands. And then finally, we'll go very briefly through the FMQSMO first source procurement path and the 60 to 90 day deployment plan timeline for agencies facing that Q4 urgency now, and how we can get you set up for a clean start to FY 2027. So each attendee will leave with actionable controls that you can begin implementing immediately, whether or not you continue a conversation with us. And we're going to start with a statutory foundation. So this is not all about a commercial best practice or a super duper software we're trying to sell. It's about law and compliance to law. So we'll go through a couple of those things, including the penalties of personal accountability. And then finally, I just want to say that ACTIS, as you will see, is the de-risking infrastructure that can scale compliance across an entire agency card program and do it quickly. I'll give you one example of that. We have a customer at the U.S. Immigration and Customs Enforcement who reported to us that their audit compliance just to the OMB, A123 was only at 48% compliance when they were doing things manually before they started utilizing Actus 5 years ago. And immediately upon taking on Actus as a solution, they were able to decrease that audit compliance failure rate to less than 2%. And they still run that near 100% compliance year after year. So that's the example of some of the things that can be accomplished with a system like Actus. So as I promised that we would talk about the 3 ways SmartPay card authority expires at federal fiscal year end. And this is really the foundational compliance layer for you. So I'm going to explain kind of each of the 3 types of authority expiration that are going to happen this September 30th and every September 30th, and the specific audit signature that each of one of those leaves in the financial record. So these are ways that the IG could, have a finding for you, or there could be a Payment Integrity Information Act auditor flag for year-end card authority failures based on any of these 3 categories. So when we're talking about the first type, unobligated balance, this is simply where purchase authority was never created. So, if there's a balance and it expires at fiscal year end, that can't be recovered. So any attempt to obligate against that prior year authority after that September 30th close without the specific legal authority to do so would be an Anti-Deficiency Act violation. So that's your unobligated balance. You might find that in an audit from missing an obligation in TAS, or the IG might flag it as an ADA finding in their report. Moving on to the second type, obligation without delivery. The authority here was encumbered and a charge was placed against that encumbrance, but the goods and services were not delivered or accepted before fiscal year end. So you see this a lot in August and September, where your cardholders have to start calling their vendors. Hey, I need an invoice. When is it going to ship? What's the delivery date? Because of this obligation without delivery problem. So if the obligation in fact survives into the new year, but the advanced payment exposure is still there under 31 USC 3324, then you have an undocumented audit item. So how this might appear in an audit is an open obligation with no receipt. So that would be, entering the new year with an obligation without a delivery. So this is frequently cited as a key weakness in internal controls and payment integrity for purchase card programs. And then the third type is a charge without a match. And I'm going to say this is probably the most common violation that you would see, because it is so difficult to match charges. When you think about what a cardholder is seeing in City Manager, it's a very truncated code for what was purchased. Values might differ by, pennies or dollars based on what the vendor ultimately ended up charging to the card, whether it was what was obligated to that charge or not. Of course, the card was charged and the payment was processed, but there was no way to do a 4-way match, or no 4-way match existed in the record. And that 4-way match would contain an exact match to the penny from the obligation, the receipt, the invoice acceptance, and the certifying officer certification. So your Payment Integrity Information Act auditors might flag this as an improper payment. The certifying officer who signed carries that personal liability now under 31 USC 3528 and may face a demand for repayment. We never want to see that. So I'm just curious for you to think, what's the most common at your agency? Which of the card authorities are you most worried about as you're approaching September 30th this year? And then there are other actions. There's July 1st actions, August 1st actions, September 1st action. Every open order must be reconciled to its type according to these 3 types. And then the 4-way match must occur. That's the foundational control that prevents all 3 types of these authorities. expiring. So let's move on to the statutory and operational obligations that are behind every card charge. So here we map the complete regulatory and operational stack that governs every SmartPay card charge. So it is clear that agencies are operating under a multi-layer compliance environment, and a gap in any of these layers creates audit exposure. So for instance, when you look at the appropriations law layer, starting with 31 USC 1341, that's the Anti-Deficiency Act I was just discussing, where you can't have an obligation without an available appropriation. So year-end unobligated balances expire. And then couple that with 31 USC 3324, which is your advance payment prohibition. And this is where vendors currently are not held to a standard in micro purchase of delivery before payment. You see that the vendor receives the purchase card payment information at the time of order, and at that time are free to charge that purchase card at any moment. In 31 USC 3324, that type of payment is prohibited. And so that card not present purchase activity, that's what 95% of what we do is online purchasing, I believe, across the government, then you have that delivery before payment exposure. And then finally,
it might be interesting to point out too that when cards first started back in my day, 30 years ago, everything was a card present transaction. You went into a store or you called on the phone and said, hey, I want to order something. It was not an online web-based transaction. Nowadays, literally 98% or more of transactions are online card not present transactions, which, by the way, cost the vendor 20 to 40 basis points more to process a card charge without the card being present. So Citibank and US Bank actually charge vendors more when you buy online than when you buy in a store with your card. Just pointing that out. It's interesting.
Thank you so much, Brian. And then, of course, the appropriations law includes that certifying officer personal liability under 31 USC 3528. We're going to go into that specifically on the next screen. You do also have a payment integrity layer that adds on to this. So there's things like Public Law 31 USC 3321 that adds your Payment Integrity Information Act in its note. So that requires an annual improper payment reporting. And then OMB A123, including Appendix B for your internal risk management controls. This can be considered an unfunded mandate, whereas there's nothing that gives you the tool set to do this, but you are required to do an internal controls framework that includes separation of duties and avoidance of split orders. So any of these are just a memo waiting to happen.
Yeah, let me just a little bit on the ratcheting up of internal risk management controls. Over the last 30 years, we've been layered and layered and layered upon to do more and more and more. That's been unfunded requirements on a P card program. And unfortunately, what's happened is that every way in which you pay a bill now has a hidden cost to the way you buy things and pay for things. So now we know that government has said, okay, no more paper checks. We want to get out of paper checks. Paper checks, I'm part of the Association of Government Accountants. The true cost now of a paper check, single paper check through its life cycle is $38.70 per check. What's interesting, though, is that the internal cost, life cycle cost of a P card transaction, which used to be $3, $4, has now risen to over $20 a transaction. So if you're doing
partly because of these
transactions, all of a sudden it's real money.
Oh, that's right. And that's partly because of these quarterly and annual program audits, all of the record creation, retention, the disposal compliance. Imagine pulling down individual invoices and packing slips and all of the documentation justifications for each individual card charge to do an annual or quarterly audit, it should be untenable in the fourth quarter. Yet the personal liability of the certifying officer is the same as if it were not untenable.
That's right. And it's 7 years and 3 months now for record retention,
That's
which is, costly in itself. It's a hidden cost, but it's there.
That's right. So not a line item anywhere, but adding cost.
Right.
Yeah, and that's really also in the operational layer that agencies have to include as well. So you have your reconciliation requirements, whether they're daily, monthly, or quarterly. For most card programs, you're talking about a monthly cardholder reconciliation signed off by an AO, supporting a payment that's made to the card program daily. So we're running in arrears by 30 days on reconciling and making sure that there isn't any compromised card response required or any open obligation management that hasn't been handled. So
and what you're really talking about there, Heidi, is the fact that it used to be a cardholder could pretty much do anything they wanted without having a bunch of other people being involved. Right now, what we have is a requester, a cardholder, a funding official, a receiving official, an invoice approving official, all with separation of duties that has to touch every transaction. And then you have an AO over the cardholder that has to approve the statement packet. And then you have an AOPC running a card program. So you've got a tremendous amount of overhead now that never existed before on P-Card. So it's gotten kind of crazy.
That's right. So we don't have to tell anyone here how difficult it is to get that four-way match to the obligation with the receipt, invoice, and a CO certification by September 30th on every single card charge. It's a mountain of risk that piles up as far as ending the fiscal year. So this, I think, is the complete compliance stack that agencies are responsible for all of these layers simultaneously. And the manual management of all these layers is definitely labor intensive and error prone in high volume environments like the current quarter that we're in.
Yeah.
So Actus, Brian, is the infrastructure that manages all those layers concurrently, reducing the manual touch and audit exposure.
I was just talking to one of my audited customers and they said, hey, you realize that I almost can't do audits properly. My sectional audits that have to occur in the fourth quarter are almost impossible. And I said, well, why is that? And they said, well, because between June 1st and September 15th, we do over 40% of our transactions in the whole year in a roughly 60-day, 70-day period. It's just crazy the amount of transactions that occur towards the end of the year, and I can't get through them all. I can't properly exercise my responsibility to audit transactions properly.
Yeah, and that's exactly why we point out 31 U.S.C. 3528 so specifically, because your COs carry personal liability. It's not a theoretical risk, it's a statutory responsibility. And that year-end volume is the compliance inflection point for all of it. Most agencies see their highest error rate in September because COs are signing faster than they're reading. So a control solution is to embed documentation into the certification workflow so the COs cannot sign without seeing proof.
Yeah, good catch.
Yeah, thank you so much. And you could do all of this, close all of these gaps before the end of September. So let's talk about the 5 CFO directed Actus controls that close the gap before September 30th. And this is one of the things that I promised you when I reached out to you. So these are
automations that we provide, right? By using our system, you automatically comply with these 5 requirements. Go ahead.
Right. So basically, this is a timeline of controls starting July 1. Sorry, we're a few days late for you folks, but we can get you caught up. So control 1 is that obligation account reconciliation. That's where your TAS level exception report to the CFO needs to already be there, showing the charges pending settlement against that expiring authority. So already by July 1st, you need to have a handle on what is going to occur between then and September 30th. That way the CFO can still make strategic decisions about which obligations to settle or close. So we're trying to do a 90
or commit prior year funds if they do recognize that. So yeah.
Yeah, that's right. So Actus helps with that by matching those receipts, making sure those open obligations are closed with matching receipts, or they are canceled so that they no longer remain open. Then moving on to August 1st, this is your activation of continuous overview. So the CFO directs the system to restrict new issuance against expiring CLINs. So in Actus, we would do that with a token, a SmartPay Now token. So when the CFO makes that direction for the system to restrict new issuance, that means no new tokens can be issued in Actus. No token, no charge.
And more clearly, as you know, most of the time, government agencies only allow certain card holders or certified funding officials or contracting officers, warranted officers to continue to place charges. They usually shut down their card program a month early simply for the reason that they have no ability to see what could possibly go wrong before the end of September. So cards really are a 10 to 11 month program, not a full year program, because you need to restrict it. Now we restrict it in two ways. You restrict it at the person access level, so you can cut off anybody else's cards simply by flipping a toggle, right? So when we had government shutdowns and we restricted cards down to $1 last year, right? Our systems were very quick to be able to set those thresholds to $1 and cut off anybody's card that they needed to cut off immediately. So we were able to restrict thousands and thousands of cards, both in their overall usage and in their dollar value of transaction process. So really clear, easy controls.
Yeah, and that's the hard stop that prevents the type 1 violations we talked about just a moment ago, the unobligated balance overages.
Right.
So then September 1st, an additional control comes in. That's the third control called four-way match exceptions dashboard. And with Actus, every open charge has a completed obligation, receipt, invoice, and certification match. And those are surfaced in real time for the CFO and deputy CFO review. So this is a daily pulse check that flags type 2 and type 3 exposures in time to remediate before it's time to close. So that's your entire September, managing what can be closed and what can be remediated in Actus. The fourth control is your certifying officer documentation package automation. So Actus automatically embeds this proof of delivery and invoice acceptance in every certification. We do this all year long, every single transaction that runs through the system. So they're all done before the certifying officer even sees the queue. Every document that they would need to review, whether it's the justification, whether it's the proof of receiving, whether it's a packing slip or the original purchase order, whatever documentation they would need to see is already right in front of them, a click away. So this directly addresses the 31 USC 3528 exposure by ensuring that no charge reaches a CO for signature without a complete documentation package.
Right. And, we're going to show that in the demo, but I will stress that this is a very unusual process because now you have complete visibility at any time of the day or night and complete downloadability of any document. So we have a document library of government forms that are automatically filled out, signed, and time-stamped so that you have proof that the right policies and procedures were followed for every commitment of funds.
Yep. And then finally, that year-end card program attestation, where Actus generates a year-end document summarizing every token issuance, every four-way match completion, and the rates of completion, open exception disposition, and obligation account balances at the close. So this is an audit-ready document ready for signature that satisfies both Payment Integrity Information Act reporting and IG questionnaires. This is delivered every October 1st. So the token constraint and control 2 is probably the most powerful preventive tool you have available to you. It's a control that stops violation before they occur. And the CFO dashboard covers control 3. It's the CFO's daily scoreboard. By September 1st, the CFO should have zero ambiguity about what is unsettled for the year. And then controls 4 and 5 work together. Control 4 ensures that COs are signing clean records, while control 5 gives the CFO the evidence package for the audit. So Brian, now that we've laid the groundwork for the why behind the Actus controls, let me hand it over to you so that you can take a more forward-looking stance on assured obligations and payment integrity with Actus.
Yeah, thank you so much. So we're going to talk a little bit about the way SmartPay Now is working. SmartPay Now is a concatenation of the SmartPay program, your existing program, which can operate just the way it operates today with just SmartPay card transactions. But it can also encompass a cash management application that ensures that obligations are in fact correctly assured for policy and law, and then the payment integrity side of the actual what is matched to the disbursement of funds is 100% match. So we're going to talk a little bit today about rebates and the way rebates might come into your government agency for prompt pay. As you might be aware, the SmartPay refunds or rebates, no matter how the law calls them refunds, the government agencies call them rebates, but we'll stick with either one of those that you're comfortable with. At the end of the day, which would you rather have, $1 rebated or refunded to you today, or $1 rebated to you 90 days from now? And unfortunately, the way SmartPay refunds work is you get refunds come into you on a quarterly basis in arrears of the prior quarter's transactions. So you're waiting a full 90 days or more for those refunds to show up. We're suggesting that there's two things that need to be thought about. Vendors right now are actually funding those refunds. Those funds they're not angel fairy dust findings. Those are coming out of the vendor's pocket, right? Vendors are paying 3% for a credit card transaction, and you're earning 1.2% back on a refund 90 days in arrears. What we're suggesting here is that there's probably another path, and the alternate path encompasses digital prompt pay as well as SmartPay. You'll always have a SmartPay program. You'll always need card activities for certain travel and fuel-related expenses, but online purchasing really can be done through a cash management application. So we're going to show you a model right now in a short video. I'm sure we're going to eat 2 minutes of your life. You'll never get back, but if you stay through it, you'll learn something.
Actus guarantees payment integrity through our patent-pending two-phase gated token process, enforcing review, certification, and approval preceding any disbursement of government funds. Our two-phased token approach starts with an obligation token and converts into a payment token. Payment integrity is assured through the creation of an obligation token whose value cannot be exceeded by a payment token. Actus payment tokens are reconciled to the penny against the receiving statement, invoice, or charge via four-way match. Actus payment tokens are validated in real time, ensuring they are accurate, compliant, and fully justified before payment execution is approved. Actus materially reduces cost and adds an additional layer of OMB internal risk management controls for the vendor and the agency. accommodating the vendor's choice of card, ACH, or digital prompt payment. The four-way match is available for review by certified federal funds officials in the existing Treasury system prior to the PAM approval of a natively constructed ISO 20022 payment request. The ISO 20022 is the international standard for digital payment processing, permitting the alignment of government accounting ID codes linked to the four-way match. Our payment integrity function automates the use of the native ISO 20022 payment requests, strengthening controls and removing the possibility of unauthorized commitments and improper payments. Actis's ISO 20022 payment instructions are executed through secure tokenization, enabling dynamic discounting, and the optimization of real-time payment rails, ensuring speed, security, and financial integrity. Actis Payment Integrity is fundamentally integrated into the federal funds management process surrounding commitments, obligations, expenses matched to disbursements. Actis' two-phase approach to tokenization uniquely delivers accountability, compliance, and transparency for all card, ACH, and digital payments through secure patent-pending processes.
Thank you, Heidi. So what's key about this?
Our two-phased token approach starts with an obligation.
We had a loop there, sorry. So the key there is that most card programs are run under bulk obligations. They're actually committed funds at the very beginning of the year, and then we play takeaway from a bulk obligation account. We try to take that bulk obligation down to zero. And that means that there's a challenge here, right, of tracking obligations to receiving and invoices to the penny in order to avoid those violations of policy and law. So what are the alternative paths to refunds, right? If you're not preparing right now for a change in your refund and rebate structure, you're probably going to get caught unawares, and you'll probably have a shortfall in your program costs and your ability to manage your program without having additional budget requirements to meet your overhead needs. So cards right now, this program will not affect current card programs, right? It's digital payments are an alternative to the existing card refund program. If you use a card, you'll still get your refund, whether it's 1.2% or less, you'll still get that refund. The vendor in a charge always pays between 2 and 3.5% through their processor and their acquiring bank, right? They get paid quickly. They get paid typically within 2 to 3 days, but not without cost. That cost is what funds those refunds. What's interesting is that if you offered a vendor a chance to say, which would you rather have, a 3% cost of processing a prompt payment or a 2% or less cost of handling a prompt payment, they would always say, well, I'd rather make a little bit more money, or I'd rather lower my cost of doing business, right, by taking a prompt payment at lower cost. So in this particular case, the agency captures about a 1% rebate under card. And in digital prompt payment, you also will get that same 1%. But what you'll get there is an immutable settlement. So you get a complete and utter settlement to the penny in your federal funds account, so that you're never having to reconcile a card statement. You're simply managing your obligation account the way you do for transactional accounting in your ERP system, right? So refunds come to the card program every 90 days. Digital prompt payments show up the same day, or at 3 days at the absolute worst if the bank, and that depends on the bank that handles the refund. But essentially, it compresses the cycle by almost 90 days. So I'd almost rather always have a 1% rebate in my budget account and not have to wait, so I can re-spend that amount of dollars that stay in my budget, right? Your audit performance, of course, goes away because, again, your card program has to be done with sectional audits every quarter and annual audits every year. And of course, with digital prompt payments, your audits are concurrent with the payment itself. So you're eliminating a tremendous burden associated with payment, but you're retaining the refunds, which are great. Let's go to the next slide. So you offer a choice to your vendor. If you said to a vendor, again, which would you rather have, a 3.25% charge or a 1.8% charge, they would always opt for the lower cost. That's true of large vendors, small vendors, or mid-tier vendors. It doesn't matter. Every vendor benefits here. Every vendor wants to lower their cost of transaction processing. The speed at which they get paid remains the same or is increased. And at the end of the day, those dollars will come back to you in savings. Next slide, please. So we're currently operating at the Department of Homeland Security, at ICE, FLETC, and USCIS. We handle thousands and thousands of cardholders every day. We hold their hand with customer service and call desk support. We make sure that everything is automated and integrated so that you get complete documentation and data, all your reporting, all of your access to records and files. And we do it all through a low-risk application. And we're going to show you what's in production right now. And BMAC, would you be so very kind? Our Director of Operations is going to walk you through what's live now at the Department of Homeland.
Yeah, certainly. Thanks, Brian. And that was a great tee-up. Let me get the application running here. Okay. So I'm going to cover everything we just talked about and show you how we do it live inside of Actus, the 5 CFO directed controls. First thing I want you notice, as soon as the user comes in, we're giving them the right information at the right time. This is their dashboard. This is their command center into visibility, spend, users, request, approval.
Are you sharing your dashboard? I'm sorry.
I thought I was.
Yep, I'm seeing it.
Okay, sorry, thank you.
All right, great. Thank you, Brian. And all their activity, I could spend a full hour just in all the different types of information that a user gets at the right time for that specific user using our rules-based access controls, including where they can immediately source any type of item they want to. When we talk about the SmartPay and the token constraints, the token control constraints, the users with the appropriate controls can go to our control tower. So this control tower is where we can focus on how authorized users, cardholders, approving officials, funding officials, and spending authority can be controlled and or restricted. They can easily turn on and off users. I'll just show you that real quick in the platform. So if there's controlled or restricted spending at the time, for example, during shutdowns, they can quickly go in there. They can do it at the user level, or as Brian was talking about when he was talking about how we do these controls, we can do it at the card level. We can restrict purchases down to all the way down to $1, or even through thresholds, for example, $1,000 to $2,000.
Right. And you can actually control by contracts as well.
Yeah.
So if you wanted to actually pay for contract purchases with your P card, but not have transactions that are open orders, right? You can actually control that as well.
Yeah,
Thank
absolutely. Thank you, Brian. Also in our control tower, we have approval flows. So another form of how we can control those authorizations on the fly, especially if they go ebb and flow through, current day policies. So it's very simple, easy setups. We set these up for users, or users can come in and set them up as well, where it can be through authorized spending amounts, putting you through the right steps. They can have as many steps as you need, all the way up through 1 through 7 through 10 through warranted officers. One of the things we also do inside our application is we've noticed and we've seen and we've heard from our customer base about authorized spending. So too many times when people go out, they shop on Amazon, they go wherever they need to go, and they order items that may not be a mandatory source item. They may not be a contract item. And too many times, those things are not noticed until after purchased. We move all of that to the left. So inside our application, we also, as with our contracted catalog items, we can also do controlled spending for people who reach out to Staples, Amazon Business, those types of things. We do that through what we call our detect and replace technology. Let me show you that real quick. So
yeah,
if a user goes,
while you set that up, B, I'll just mention that we're integrated into GSA's commercial portal program. So we handle right now over 95% of all the transactions are available right here in Actus, automatically integrated into these workflows and approval processes and record keeping processes. So when you shop on Amazon, you're actually being recognized by your PIV and CAC card. So it actually carries your identity into Amazon Business and only into Amazon Business. It will not take you to Amazon.com. So it will automatically force you into the right Amazon experience on the shopping side. But the problem is Amazon doesn't know about your department's mandatory source agreements. So in the government right now, we're trying to drive the building of a secure supply chain for PPE equipment and supplies. So masks and gloves and things during the next pandemic. Hopefully we never see one again, but we recognize that we can't be held to hostage to foreign manufacturing of masks and gloves. So the government's now utilizing this mandatory source contract for PPE, but Amazon doesn't know about it. They're not in it. They don't run it. And so when people go to buy masks and gloves and things on Amazon, we immediately bring that shopping cart back into Actus. Part of our assured acquisition, assured obligation management, right, is to make sure that policy and law is being followed. So when you fund these carts and apply for a request to spend money, your certifying funds officials aren't going to see that until it passes what? A check on compliance. So it's automatically going to say, hey, there's non-compliant items in this shopping cart. Replace that item with the compliant item. And it's going to pull from the mandatory source contract. So it's going to pull that item out of the Amazon cart, and it's going to immediately start a correct requisition for approval and workflow and funding obligation under that particular mandatory source contract without the person having to be trained on policy and law. It will automatically hold their hand and help them recognize that there is a mandatory source contract, and that utilization of that contract keeps them compliant with their agency's policy, not Amazon's policy, right? So this is a much better policy to follow than the vendor that you're on, right? You want to follow department policy. So we're able to now track funding at the line item level and even do split funding at the line item level. So what's interesting about this is even though you're doing bulk obligation accounts and you're using program funds, those program funds might need to be split across various program funding sources. And so our system enforces matches to the penny of dollars obligated under a single contract line item. So in this particular case, you can split fund that line item. Even shipping and handling can be split funded. So literally every aspect of a purchase order can be split funded and accounted for in your bulk obligation accounts by program. So really nice ability to manage funding and make sure that all the documents and records are maintained. Now, B, would you be so kind to show them a 1501 or an approval workflow form that needs to be signed? Every government agency, and I'm very sure that everybody has some type of government form that has to be filled out for a purchase request. That purchase request has to be signed off, and we time and date stamp every record in our system. So when we showed you the little short film, we showed you that every purchase is tied back to records, time and date stamps, and signatures. inclusive of your government forms. So for Homeland Security, we've embedded their government form, and we automatically fill it out and make sure it's complete to 100% and stored for 7 years and 3 months at a minimum. And for our military customers, we store for 10 years. So you're able to then see who signed for it, who approved it, who's waiting approval. So you'll never be surprised with an audit finding that says, well, you didn't get a receiving action, or you didn't get an invoice accepted, or it wasn't matched to the penny. You'll always have exception reports, and you'll always have corrective actions, including Section 889 attestations, right? So the vendors are supposed to be making sure that they are compliant, certifying their sources of supply, and that it doesn't involve violations of the Buy America Act, right? So these are really neat little things that we've thrown into Actus to be 100% compliance to your P-card program. And whether you're buying by P-card or whether you're buying by digital prompt payment with cash, you're still going to need all these records. You're still going to need those signatures. So we thank you for a little bit of attention to the exactness of our system and making sure that you have any questions about compliance with policy or law or documents or document retention or data access. I do want to show you, did we show the merge and export?
Yeah, I can do that right now. Absolutely.
So one of the great things, most systems use SharePoint for document management. SharePoint is not a secure system relative to documents that can be pulled or actually with AI nowadays, you can falsify a document and upload it into SharePoint, and SharePoint will accept it with absolutely no controls. So unfortunately, SharePoint's getting a really bad reputation as a document storage system for records management. We use a different approach. We actually allow all the documents to be concatenated into one file. So we merge and export every record, the purchase order, the request, the packing slips, the invoices, the justification statements, everything, and including property tags. If an item is bought and requires a property tag, you're going to have a custodian and a building and a room and a timestamp signature on that asset. And then you're going to have the invoice automatically uploaded into the system as well. So this is the right way, I think, to handle any time money leaves the government. We must have data and documents in support of that money leaving the government. And so we're now certified to pull data every night from the banks to be able to do reconciliation and audit reports every night. So if you're paying your bill daily or weekly or monthly, you need to have your reconciliation done. So we do reconciliations automatically in the system by pulling that data overnight. And what's interesting here is that charges can never show up on a card statement without a record being attached to it. So if somebody goes rogue and buys something without having it ever touching a financial management system, the charge shows up. We show that as a card present transaction that occurred without documents and records. We will float that to the top to make sure that your card holder, the AO and the AOPC, is aware of those charges that appeared on the statement without record, and those have to be addressed before the statement can be approved. What's interesting here is that every charge is automatically matched in a much more accurate way than any other way that you can do reconciliation today, because it's a four-way match: request, purchase order, packing slip, and invoice tied to the charge. So if a tax charge shows up, it will automatically flag the dispute as a tax charge that was improper. So you'll get a warning on any dispute where taxes or any amount that was charged higher than the requisition, purchase order, and funding sources, right? The last thing I will say is that most people fold, spindle, and mutilate their statements every month. They have to copy and photostat all of their records and files, and they keep them in bankers' boxes for audit. It's a terrible way to run a business. But we make sure that all records are available electronically and with signatures and timestamps, and they can all be exported. You can export reports by vendor, by card holder, by program area, any way in which you'd like to export data and documents, and you merge and export them all in a zip file. So you can literally take a whole month of transactions, hundreds and hundreds of transactions by a single cardholder or contracting officer, and all of those records with every timestamp, with every record or file is automatically exported for visibility and submission for audit. That means that your AOPCs have complete visibility over every card program under their purview, and you have really good data around sources of supply. How much did we spend with Amazon? How much did we spend on PPE this year? Did we utilize 100% of our allocation for PPE, or did we have violations of that contract throughout the period? So tremendous visibility at the line item level, at the funding source level, and at that vendor level, which is critical to knowing where the money's going.
I think that's a great segue, Brian, to open obligations, in which also Heidi touched upon earlier, the open obligation reports that we do, and also our prior year funds reserve and year-end closeout markup reports. Let me show that over there real quick. And so, so we have, reports, Actus Lowe's reports, giving the right report to the right user at the right time, whether you're an auditor, a funding official, finance, it doesn't really matter. We love our reports because they just give a wealth of information. So when we were talking about these open obligation reports, we automatically create these reports for the right user. For example, right now I'm looking at the July 1st PO open obligation reports. So we can do these periodically throughout the year when they're needed, including the September year-end report. And also we can open these up by vendor as well. So of course, these open obligation reports are items, excuse me, let me just grab another one. There we go. These open obligation reports, of course, are items that have not been received. There's not been transactions against them, and they're still hanging out there. Another report that we do that Heidi touched upon is the four-way match report, or Brian even talked about it in our reconciliation report. So once again, this is one of our audit reports that we do, and these are highly customizable, but this of course is the four-way match report. All those points on that Brian was talking about, whether it be the PO, the invoice, the receiving statement, and of course the obligation towards it, all those items are tracked inside of Actus. One of the last reports I want to show you and bring your attention to is that prior year funds reserve, or that year-end close-up report. So at the end of the year, as Heidi was talking about earlier, we have those hanging obligations out there, and the year's going to close. So we bubble all those up, all the way down to anyone that has not been transacted at all, or any of those that have been partially transacted. And we do the PYFR, or the PIPR, I think we call it. It's the prior year funds reserve. All that money has to be obligated in the following year. I didn't know if you wanted to speak any more to that, Brian.
Well, no, I think it's a great point, though, that you have, if you do, it's a use it or lose it world, my friends. And if you at the beginning of the year, you commit funds and you obligate a bulk obligation, you must draw down that obligation to zero. That's the game, right? If you have hanging obligations and you don't have information about what's hanging out there, and you don't protect those funds for as prior year funds, right, that you're going to use in the next year for a valid need. Remember, this is a bona fide. You have to prove that you need it this year, but it's not available for fulfillment this year. But you're going to use this year's funding to cover the delivery in the next fiscal year. So you have a certain number of months, I believe it's 5 maximum, to utilize prior year funds that have been reserved, right? But you must, know about them, and you must designate them as prior year reserve with the right documentation. So we do that for you automatically to make sure that no funds get swept and returned to Treasury under law. So this is we just have 5 minutes left, so I wanted to make sure that we've covered an awful lot today, but we wanted to make some offers to you. And Heidi,
Yes.
BMAC, if you would return the control back to Heidi, I'd like to just give it a quick wrap and make sure if there's any questions that we address those in the next 5 minutes. Heidi?
Excellent. Thank you, Brian. So I want to show you this timeline that kind of maps the entire year-end close cycle and the specific close activations and decision gates within it. So this is really the operational map that CFOs use to drive the execution that happens in the 90 days from July 1st through October 1st. And if you take a look at this, you can see how Actis does things like the open obligation account reconciliation weekly to support that year-end close guidance. And this timeline honestly is not optional. It is built into every agency's financial close cycle.
Yeah. Yeah. You have to start the year clean and end the year clean. And that's what we automate with our processes.
That's right. So come August 1st, new obligations stop. September 1st requires that reconciliation. September 20th is the documentation hard stop. Actis supports every step of the way. So this is an urgent thing to look at if you want to take control this year for FY 2026, right, entering into 27.
Well, to be honest with you, it's probably, let's face it, most people are not going to do anything except try to survive the end of this year. What can we do to help them next year, right, to make 2027 a success from day one? So let's just take a look at what your options are here. So Actis, very fortunately, is GSA approved as a sole source. We are actually validated under the Department of Treasury as a sole source. So your choice one is status quo. Don't do anything. Just hang on. Do the best you can to close out this year and hope that next year is going to be the same. Option two is try to get your arms around what's available in Actis as a sole source, Treasury validated, and GSA multiple award schedule. And by the way, it's a sole source directed award. So you can take a look at that. We have offered a poll here that says, would a complimentary 30-minute agency SmartPay risk assessment be useful to you for your year-end planning close? We can certainly talk to you about your state of readiness and what your current processes are, which will help you to think about what you want to do in the future years. It's not going to help you necessarily this year, but it will help you highlight the value of making changes as you go forward and think about the possible reduction of SmartPay rebates and the ever-increasing demands for audit and policy adherence to law. So let's go ahead and run that poll, but then also in the last minute, offer an opportunity to meet with us at no obligation, talk to our customers, because we've been operating for 5 years now, under FedRAMP, with a very excellent CPAR rating. Our contractor performance rating has always been excellent. You can talk to our people who have integrated us or don't integrate us, but use us every day. Get a sense of what it would cost to run this kind of a program. We use about 17% of our current customers' rebates to run this entire program. So they don't use any appropriated funds. They use a very small portion of their rebates to fund this entire program, including the customer support and training, which is available 24/7, by the way. And so it's almost a no-brainer if you're looking for compliance, auditability, compliance with policy, law, contract utilization for mandatory and preferred sources. And we urge you to learn more at act.us. ACT stands for Accountability, Compliance, and Transparency in the U.S. And that's something that you've read in every GAO audit report. We need more compliance. We need more accountability. Yes, and you need Actis. So we thank you so much for joining us today. Reach out to us. Let us know. Schedule a demo. It's free. It's easy. We don't lean on you. We just show you what's available. Thanks.
Thank you, everyone. I'll stay on for a few minutes in case there are any questions. Other than that, the session is ended, and thank you so much for being here.
Happy hump day. Thanks.